Hey everyone, and happy Friday. Welcome to Trader Tales with IBD. I'm your host, Alissa Coram, and we've got Harold Morris, Senior Product Coach at IBD, joining me this week. Hey Harold, how's it going?
Good afternoon, everyone.
Hey, well, I would say, happy Friday, but it really wasn't so happy for the market.
No,
Harold, what a tough week.
yeah, it was a very difficult week. Um, we knew there was going to be some things that were going to cause some uncertainty, and ended up causing a lot of little bit of pain, like the chairman Powell said last Friday. So this might be beginning of the pain that he mentioned about a week ago.
Yeah, and while it's not fun and it's not too surprising either, especially you, Harold. I mean, you've been on top of this market. A couple weeks ago, we were on Barron's Live, and you
Mhm.
were waving the caution flag about not being convinced about the rally, even though we were seeing promising action in some growthier type stocks, whether it was biotech or solar. But that key 200-day line, you were saying, you weren't going to be convinced until we got above and stayed above that 200-day line. And that sort of positioning, that mindset has definitely served you well in recent weeks, would you say?
Yeah, and there's two reasons behind that. First off, a lot not too many good things happen when we're below the 200-day moving average. Some of your biggest down days in market history take place when the market is below the 200-day moving average. That's one thing. Second thing is we did this in March. Back in March, we had a nice uptrend. It looked like it was a pretty broad-based uptrend. We got up to the 200-day moving average and we turned back. And so I was looking at it this time around, even though, like you just said, it was a nice uptrend, pretty broad-based uptrend, and I wasn't going to be, and I was participating. I was treating
Yeah.
it like an uptrend, but I wasn't, uh, I wasn't, uh, I wasn't treating it as if, okay, bear market's over. It's time to just jump in with both feet, and we're off to the races. No, you have to let the market prove itself,
Right.
and of course it did not, and we got turned back.
Exactly. So we all needed to cool our jets, and it's great to participate when you do see some stocks acting well. But as always, managing our risk is so important. We've been also talking about smaller position size and
Mhm.
backing away when things aren't working. So it seems like when we did hit resistance over the last couple of weeks, scaling out probably needed to happen a lot faster than dipping the toe to get in the rally. How did that go for you?
Well, yeah, as the market was moving up, I was selling into strength, taking profits when I had them, because again, that 200-day, it was just looking down on us, and it was like it's ready to strike, and I wasn't going to let it take my profits. So I was taking profits a little bit early. If I got a 10 or 12% profit in a stock, I would take the money and run.
Yeah, exactly. Yeah, that's the way to do it. I mean, because I feel like more often than not, we've seen small gains round trip. We haven't seen a lot of stocks go up 10, 15, 20% and form a new base and then keep climbing.
Right,
It's been a lot of hit and run kind of
right,
trades, I feel like.
right. Those type of stocks have been the exception and not the rule.
All right. Well, now let's talk about how to uncover leadership. So we talked briefly about solar and biotechs being some of the areas that we've gotten somewhat excited about lately. Maybe short-term trades that could have been made. Maybe some traders who got in early on some of those moves. Maybe they're still holding partial positions, or maybe if they're really aggressive, just not taking profits yet, depending on how some of those trades are doing. But let's dig a little bit more into how to uncover that new leadership, because I feel like the first half of the year, all the focus was on oil and gas stocks, those
Hmm.
big energy names, And then as the market was trying to bottom in June, it seemed like we started seeing some other names bubbling up to the surface. How did you stay on top of that emerging leadership before it became maybe really obvious to everyone?
Well, it's the use of the Growth 250. The Growth 250 and MarketSmith, that's our major list that we use to do research. It tends to be a very large list. It can be anywhere between 250, 300 stocks. So we consider that as part of our weekend routine. So I'll go to the list. I will sort the list by our composite rating, one of the proprietary ratings that are built into the MarketSmith chart. And I'll go through the list, just hitting the space bar, going from one stock to the next, just looking for, the fundamentals, strong sales, earnings, profit margins, etc. And then the chart pattern. The chart has got to be there. In
Right.
addition to looking at that list, I also like to look at the additions to the Growth 250. That's a place where I can spot sector rotation because the Growth 250, that list, it is focused on industry groups, and it's good at identifying when there's a change in industry groups. You typically hear sector rotation, which is good, but we track the industry groups because an industry group is a smaller segment of a sector. So the industry groups tend to move a little bit faster than an entire sector. So I will
Yeah.
look at the new stocks that are added to the Growth 250 just to see if I can spot just some new trends in the overall in the makeup of that list.
Yeah, so we'll walk people through how to get there. You can get there a couple different ways. So first, the open stock ideas button. I love what you said about scanning the Growth 250 because I feel like that really is just taking a step back and you're looking at a large number of stocks. I feel like that gives you a really good feel for what's going on underneath the surface. And there's a number of ways that you can sort the list. Is there any particular way that you like to sort it? Do you like to sort it by industry group? And so speaking of, right at the top right now, we have energy, solar, and biomed, biotech.
Well, I like to use the composite rating, and even by sorting by the default sort for the Growth 250 is by industry group rank. So stocks at the top of the list, those stocks are at the top of the list because they're in the top industry group.
Mm-hmm.
But I like to sort the list by the composite rating. And even by doing so, I'm still looking at some of your top stocks in some of your top industries. So I'm not, quote unquote, throwing off the list by, resorting it. I just like the composite rating because, it's a very comprehensive rating. It takes into account the, 70% fundamentals, 30% your technical. So it's a very comprehensive rating for a stock. And when I sort by the composite rating, I still am looking at stocks in your top industry groups because stocks in your top industry groups, those top stocks tend to have your strong fundamentals. So
Exactly.
that's my approach on using the list.
Yeah, I feel like that makes a lot of sense. So, all right, say we've scanned the Growth 250 right now, 300 items, which is also maybe something that we take a mental note of how many names are on the Growth 250. But then I'm going to expand this a little bit more because I really like what you do with the additions and deletions, as you said. So let's talk a little bit more about how you add this to your process and your review, your routine, as it were.
Yeah, so as a part of my routine, in my column layout, I have the industry group name. I don't know, it may not be there by default, so you may have to add it. Oh no, it's right there. So
luckily
the industry name. So yeah, so I just click on that just to sort it. I want to sort it alphabetically. Okay. And I sort it alphabetically, and all I'm looking for is to see, what industry is dominating the list. So for example, back at the very beginning of this year, there were no oil and gas stocks on the list. The first week in January of 2022, zero oil and gas stocks on the list. The very first week at the end of I believe it was January 7th, that was a Friday. That's when the Growth 250 gets updated. I was doing my research on the weekend and I saw that there were 35 stocks from the oil and gas industry group showed up on the list. So that was a sign to me, okay,
Mm-hmm.
there's some type of sector rotation going on. We were seeing a lot of tech stocks at the end of 2021,
Mm-hmm.
but then 30 something stocks from oil and gas jump on the list. So the first thing I did after that was I went to look at the ETF XLE, which is the energy ETF. I ended up buying that. So I bought XLE, and then I wanted to get some exposure to energy sector. And then I went and started to dig in a little bit to see, okay, well, what stocks performing well? And then from there, I think my first oil and gas stock was XOM.
And so, well, I guess while we're here, let's talk about where you got into that one. Was it on a pullback, or when it was shortly after when
So
it
it
was
was in
breaking
the
out?
Yeah, so it was in so I don't remember exactly, but it was in January and it actually broke out in December. So I
Mm-hmm.
got it on a pullback. If you watched IBD Live, I talk a lot about the 21-day exponential. So I like using that 21-day exponential. I'll use that to start a position. Most people like to use it to add, which is more with the common use of the 21-day or the 50-day. But I like that 21-day exponential so much that I will use it to start a position. And that's
Mm-hmm.
how I got into XOM back in January. But it all started because I was doing my routine. And the Growth
Yeah.
250 was saying, okay, there's something going on in the oil and gas industry of the market.
Right. So speaking of, it seems like we have started to see a lot of oil and gas stocks start bubbling up once again. They had a big move first half of the year, took a little break, and then the question became, all right, is that the end of this move? Have they topped, or are they going to go on to build bases and then continue the move? We're in that base building part and maybe the early stages of that next leg up. But what's your assessment of the leadership flowing back into this area of the market?
Well, just to back up a little bit, just to show you how well the Growth 250 works, the additions, a lot of oil and gas stocks fell off the list in June.
Right.
Remember, oil topped out and sold up. I think the oil just in the month of June was down around 20%. A lot of those stocks fell off the Growth 250, but then the Growth 250 was showing us a biomed, which was very unusual. Biomeds tend to be very speculative. And I was kind of surprised because we weren't in a market where you want to do a whole lot of speculation, but that's what the Growth 250 was showing. And I ended up getting into XBI as a result of seeing biomed show up on the Growth 250. But then eventually, if you fast forward to today, we are last 2-3 weeks, we're starting to see more oil and gas stocks show up on the Growth 250. So that's telling me that oil and gas is starting to reassert itself as far as some leadership in today's market.
Yeah, so this is really helping you keep a finger on the pulse of what's happening underneath the surface. Of course, always important to put it in context of what is the broad market doing, what are those technical signals that the major indexes are giving us, but then going that layer deeper, looking underneath the surface. And it seems like, this is very fertile ground for searching for potential stock ideas, whether they end up being actionable or at least for the watch list. So Harold, what would you say? I mean, of course, you're going to do your research this weekend. It's upcoming after the pretty brutal week that we had this week. So will be definitely telling to see what held up better than others. But what's your assessment right now of the groups that we should be focusing on? Is it really oil and gas again? Would you say that's the number one group we should be paying attention to, or are we missing something?
Yeah, well, I believe so. That's going to be the sector that's going to be quote unquote hot right now. But I'm not going to go by what I think is going to happen. I'm going to look at what the market is doing, and I'm going to act accordingly. Just looking at seasonality, we're getting into the end of summer. oil and gas is going to be needed for heating oil. It's going to be it's going to be needed. Natural gas is going to be needed also. So those stocks, some of your natural gas producers, your oil and gas, it's going to be they're going to be in demand. Especially we have solar too. You know, with the bill that was passed by the government 2-3 weeks ago. You need oil and gas. You know, a solar panel has certain minerals that it has to use. And those things have to be drilled out of the ground. And we don't have, clean energy drilling machines. They need oil and gas to power those machines to get the materials out of the ground for solar and other clean energy. So we need to drill for cobalt and lithium and copper and all the other materials necessary for these clean energy mechanisms that are expected to come real soon.
Exactly. Great points there, Harold. So that's a rundown of the additions and what can be uncovered there. And I feel like that goes hand in hand with the deletions. So I can pull that up. So the additions, sorting by industry group, rank, well, not rank, but just alphabetical. And so you can really see what is standing out. Is that what you do with the deletions as well?
Yeah, and I just recently started looking at the deletions because I don't know what prompted me to do it, but I think it was a couple of weeks ago, I saw that a bunch of oil and gas stocks dropped off the list. Okay, and now I was looking at the deletions list, and then the following week, a bunch of oil and gas went back onto the list. And I thought that was kind of strange. See, one week they're being deleted off the list, and then the following week they're being added right back on. So I thought about it, and I say, well, there's probably some rotation within the sector, rotation within the industry group. So they're getting out of oil and gas. Maybe ABC oil and gas is it's for whatever reasons. Maybe it's made their move. They have their profits, but they want to remain in that particular industry. So they'll look in another stock in the same industry. So the Growth 250 was pointing me into that direction, that there's some rotation within the oil and gas industry of the market.
Yeah, we've talked a little bit about how there at times can be this divergence between what oil stocks are doing and what natural gas stocks are doing. So yeah, those pockets within the broader sector, staying on top of how the underlying commodities are impacting those names, and also knowing what you own. So like with an Exxon, ticker XOM, it has exposure to both crude oil and natural gas. So that's something else to keep in mind.
Yeah, so it gives you almost some broad, almost like an ETF for the oil and gas industry, because it's got some exposure to drilling and the natural gases and some other things. So it functions almost like an ETF for that sector of the market.
So we get asked a lot on IBD Live about trading routine. What's your routine like? I want to know what the panelists' routine is like. So I think this was so great to go over, Harold. Would you say anything else that helps you uncover that market leadership that we need to know? What's your secret?
Okay, so starting off, I always start off with the Growth 250 as my routine. So it's a weekend routine. We consider it the weekend routine because it's a large list. There's 300 stocks on the list here. And typically on the weekends, you have more time to go through the list. So that's the place where I start. I also like to look at another list called RS Line Blue Dot. Okay, so our RS Line, we have a line on our chart. It's called the relative strength line. What it does, it compares the stock's pricing action to the S&P 500. And if that RS line is in a new high, it'll put this blue dot on it. But the great thing about the RS Line Blue Dot list is, for a stock to make it onto that list, not only does it have to have that RS line with the blue dot, but the stock is also in a basing pattern. So the combination of the two, that is a very bullish sign for a stock. So when that RS line is making a new high prior to the breakout, then that's a very bullish sign. We're not going to buy it just for that reason, but that's a very bullish sign for a stock. So that's a list that I like to look at. One thing you need to be careful about with that list is there are stocks that have a a variety of different fundamentals. So one of the things I use that's on the chart is the checklist that's on the right side. So if you may want to pop that out, and we have the William O'Neill checklist that it defaults to, and I like to use that. So I keep that list open no matter what stock I'm looking at. So
you
there's
can just
9
space
items.
bar. You can just space
Right.
bar through. You don't need that bottom panel open.
Right. So I like to see stocks that have at least 7 out of the 9 items being met. Okay. So if I see look at something that's got 5 or 6 out of 9, I'm pretty much not interested in the stock, and I'll just move on. So the RS line blue dot, that is a list. Now it's been a very large list in recent months, but still you can find some good stock ideas. So that's one list you want to be looking at to find stocks showing relative strength, especially this week as the market has sold off. You want to look for stocks that are kind of bucking the trend.
Right.
That's one of the things that the RS line is going to do. It's going to show you stocks that are bucking the trend of the market. So as the market is selling off, you want to look for stocks that are kind of going against, these stocks are swimming upstream, so to speak.
Yeah. And I feel like in addition to perusing the list for trade ideas, it also gives you a sense of where the strength lies in the market. And maybe that could be a negative sign. So like utilities, if there's a bunch of defensive stocks that are at the top of the growth 250 and RS blue dot list, those are not the kinds of stocks that we get really excited about that can really lead the next rally in a big way. But once we start seeing more of those kinds of growth leaders populate the lists, I think that's something that would give us more confidence about the market too.
Yeah. So like you said, you're seeing a lot of utilities and other defensive type of stocks. Those don't really excite us too much, but at the same time, it tells you about sentiment of the market. There's money is flowing into defensive areas of the market, and that's almost a sign. Well, you should be defensive too. You mentioned position size a little bit earlier. You start seeing a lot of utilities and other defensive stocks on the growth 250. That might be it's like somebody tapping you on the shoulder and saying, hey, maybe you need to back off a little bit, be a little bit defensive, not be so aggressive, take smaller position size, etc.
Such great advice. All right, one more thing that we want to review before I ask you the next step of your routine, and that's a new screening parameter that we have related to relative strength. So talk to us about that, Harold.
Right. So a couple months ago, there was a new screening parameter added to MarketSmith, and it was called RS line within 5% of a new high. Okay. One of the things that I mentioned, we talked about the blue dot a moment ago. You can find a stock that has a blue dot on it, but the stock has already made a big run. It's extended. But this RS line within 5% of a new high is looking for stocks where that RS line is moving up. So it's within 5% of a new high. The fact that it's moving up is telling you that the stock is outperforming the S&P 500, because that's what that relative strength line is measuring. So what my plan for this weekend is to do some screening. I'm going to use that RS line within 5% of a new high, and it's just a yes or no. You just check it, and you check yes. Another thing I'm going to be looking for, I'm going to be adding dividend as a part of my screening criteria also, because in weak markets, in uncertain markets, a lot of your institutions tend to focus on dividend paying stocks. But it just so happens a lot of your oil and gas stocks pay dividends. A lot of your commodity and chemical stocks also pay dividends too. So those stocks are showing leadership. Well, at least not the last couple of days they haven't, but historically your chemicals and your agricultural, oil and gas, those stocks tend to pay a dividend, but they're also showing signs of leadership. So that's one of my plan this weekend, is to have that RS line blue dot RS line within 5% of a new high. That's part of my criteria. I'm going to add a dividend criteria. You can find dividend, I think it's in the margins and ratios.
Okay, great. So we'll get to that. So price and volume, number 32 on the list is that RS line within 5% of new high. And that's what I was going to ask you, because just shy of 1,500 stocks is still a pretty big list. So screening using some other parameters to further filter that down does seem like a good idea. So then margins and ratios. So dividend yield, there you go.
Yeah, right there.
First one on there.
So I don't know.
What parameters would you use?
I think I have 2% as my on the minimum. I don't have anything because I want 2% and higher, and then I wouldn't add it the liquidity. I think I used the dollar volume, the 20 million in dollar volume, because I want some liquid stocks, and that's under price and volume.
So here we go, dollar volume. So what would I put here?
I think you put 20,000. That would give you 20 million. I believe that's the way it works. So
yeah. So tack on 3 extra zeros, and then you get.
So what that's telling the screener to show me stocks that have a dollar volume of 20 million or more. So because you want liquidity, and then I also have the composite rating. You know, I'm huge on the composite rating, so that's also part of my criteria. I don't remember exactly. I may have gone to 90 and higher. 90 is a minimum, and then so you've got 49 stocks. So that's manageable.
Yeah, it is manageable.
Yeah, that's a manageable list, and probably I bet you if you just look through the first 2 or 3 names, you'll probably find there's some pretty good looking stocks here.
And maybe we'll even sort it by comp, so that way we're getting the cream of the crop on top. And there we go. And then from there, you go through, all right, is it setting up? Is it extended?
Yeah.
And then,
so I have that checklist open. Right. So I have that checklist open. Most of them are going to pass. Now, again, I mentioned I like to see at least 7 out of 9, but since we're looking at very liquid stocks, most of them are going to pass that 7 out of 9 criteria. But I like to use that checklist for me, it's a filter. So as I mentioned a moment ago, if I see something that's got 5 or 6 out of 9, I'm pretty much not interested in that stock. Right. So with this screen here, pretty much all of them are going to meet that 7 out of 9 criteria. The only question is, what do the fundamentals look like? What does that chart pattern look like? And if I see something I like, then I'm gonna set alerts and get prepared for the upcoming trading week.
Great. So let's do that. Let's set an alert together. How about let's just do one for WES here. It was off by about 4% this week, but it was in some lighter than average volume. So are you setting the alerts off of the daily chart, I'm assuming?
I start off with the weekly, but this particular stock, since it had a 3 weeks tight pattern, this is one I talked about on IBD Live just yesterday. I found this stock with the screen that we just went through. So you look at this stock here,
you stopped at the right
there's no
one.
Evidence. Yeah, I mean,
it's like subliminal messaging. I knew.
Right. So you look at this stock, it's like, what sell off? As a market, it's been selling off. You couldn't tell by the stock. So this is the type of relative strength we want to look for in a market like we're in now. So it has a 3 weeks tight. 3 weeks tight is a very bullish pattern. Basically what a 3 weeks tight pattern is, where the stock, the closes from 1 week to the next has to be within 1 to 1.5% of each other for 3 consecutive weeks. And that's typically a sign that, okay, institutions that are in it, they're pretty much satisfied with it. So they do a little bit of selling. That's why you'll see the volume dry up a little bit, but then the stock will pause a little bit and then take off. So I think I have an alert set. I don't remember the exact alert price.
Is it the high of the 3 weeks tight? Or?
Yeah, the highest bar in the 3 weeks tight pattern. So I'll use that as my alert. Yeah. So right there. Yeah. So you can use you can draw that trend line there. Yesterday, going in before yesterday's market, it was finding support at the 21.
Right.
But yesterday and today, it's kind of fallen below that. But so I'm gonna have to maybe reassess the stock and see, okay, is it something that is still setting up? Is that 3 weeks tight pattern? Is it still in play or what? So I'll be looking at that over the weekend.
Great. Yeah. Supported the 50-day. I think that.
And we got a 3-day weekend, so there's no excuse.
Yeah. There you go. So we'll have to see if we can find support there next week. Well, Harold, it was so great to get an inside look at your screening routine and how you get prepared for the week ahead and how you are uncovering that industry group rotation and emerging market leadership. So thank you so much. It was awesome.
Well, thank you for having me, and it was nice talking to you, and everybody have a great holiday weekend.
Yes. And before you go, so don't leave, everyone. I want to give a quick shout out to the upcoming Best New Ideas in Money Festival that both of us are going to be participating in. We're going to be heading out to New York City, September 21st and 22nd. Harold, it's going to be a lot of fun. We're going to be doing IBD Live on stage. So IBD Live's hitting the road, and we've got some fun sessions too.
Yeah. So that'll be very fun. I don't think we've ever done it remotely like that.
So it's remotely from our houses,
it'll be a big experience.
But not, you know, on a
right. But so it'll be interesting, and it'll be a lot of fun. So everybody tune in.
Yes.
Either in person or virtually.
Exactly. So you can meet us there in New York City if you happen to be in the area, but also there is a virtual option as well. You can check out IBD's Twitter feed we have some promo links and things like that. I've tweeted out a link too, but feel free to reach out to me. I'll also put it in the YouTube description if you are watching this on demand over the weekend or want to, come back a little later to check out that link so you can sign up ahead of time and get the scoop on all of the other sessions too, because it's not just us. MarketWatch is putting on the event, and they have some big speakers like Ray Dalio, Carl Icahn. It's going to be fun. Lots of ideas and lots of great stuff from some big voices in the investing community, Harold.
You don't want to miss it.
All right. Well, we'll see everyone there in a couple of weeks. Hope you have a great holiday weekend too, Harold, and same to the audience. We will see you right back here next week. And I'm going to have another Money Festival person joining me. We have a hedge fund manager, Jim Ropel. He's going to be my guest next week in the hot seat. So we will see you back here next Friday, 5 p.m. Eastern. Have a great weekend, everyone.